Assalamu alaikum, everybody. I'm going to go through about 34 slides, but I am going to be taking all of your Q&As and really help you throughout the process. This has been an evolving process for us throughout the past 2 weeks. So even you guys, when you got these slides, you'll see there's going to be some new slides that we've inserted. And what we're going to do is go through this in a very concerted way. I'm going to cover business and not-for-profits on one side, and then I'm going to cover individuals and employees on the other side. And the whole idea behind it is to be able to allow you to really gain an understanding of all of the relief packages that exist, because there's choices and decisions to be made. You cannot ask for all of them, so you have to understand which one is which and how to go about doing that. So let's go ahead and get started through this, but I'm going to literally cover everything that's here on the agenda. So the first thing that came out is really the business provisions for people that are business owners and or self-employed, i.e. the gig workers. And the first package that came out with the first development was what is known as the EIDL loan, which is the Economic Injury and Disaster Loan. And this is a loan that you send directly to the SBA, and you can borrow up to $2 million. And this loan is really designed to be very straightforward, because it's not asking you to do a lot of underwriting, but at the same time, it is part of what you need to do you can use it to pay your debt, payroll, accounts payable, and all the bills that really you were not able to pay because of the economic disaster that you have suffered. Since the entire country has been classified as a disaster zone, pretty much every business is going to qualify for this, with very limited limitations. The interesting part is that if you're a business owner, you're going to be able to get the interest as capped at 3.75%. And as long as you're using this money to run your business, to pay rent, you're going to be fine. And then if you're a not-for-profit organization, the interest rate goes down to 2.75%. Now, the way this loan application process works, and again, we recommend you hire someone to help you fill this out. You're going to fill out a form called SBA Form 5, which is a normal application. But then the SBA is going to tell you what is the amount you can borrow, which is based on a working capital model. They calculate the working capital based on the form that's on the screen, which is Form 1368. And it's very important that you get this form right, because that's what's going to determine how much money the government thinks you're going to be able to borrow from them on the EIDL loan. This is the website. Again, you click there and you can start the process. The EIDL loan is a loan that's, again, funded by the SBA. When you go through the website, you're going to see 3 steps. These 3 steps are not that complicated for you to process. You're going to have at least 2 dollar figures with you, which is your revenue for last year and your cost of goods sold or direct labor. If you get stuck and you don't know how to answer a particular question, because this is all online, you can call the 800 number that I have on the slide right here. The hotline support people at the SBA, they're very good and knowledgeable. It takes time to get to them, so you may be on hold for a while. But other than that, if you really want to go through the economic injury, a disaster loan, we have also included a hyperlink to our website that really lays this out in a succinct manner for you, so you can understand how to fill out this loan. The beauty of this loan, again, is that it's low interest. It can go as high as 30-year loan, so the payments can be really small to help you bridge any economic shortcomings that you have. So with that said, we're going to go into the new program that came out recently that has been really making headlines, which is the Paycheck Protection Program. In this particular lending program, which has many unique characteristics that I'm going to talk about, one of them is the fact that this program is designed for someone that wants to retain their staff, ergo the name, Paycheck Protection Program. And what you need to understand about it is that it's 100% SBA guaranteed, i.e. the SBA guarantees it to the bank. It has a low interest rate, which actually starts at 0.9% and is capped at 4%. It has up to a 10-year term. And what we've been seeing is if the bank gives you a low interest rate, they tend to keep it to a 2-year term loan And if you ask for longer term, they increase the interest rate. So think of it as like a mortgage almost. But the nice part is there's no fees to pay. You basically will be going through and seeking financing, and this one is capped at $10 million. It too is based on a formula that we're going to go into detail, but just to give you the high level amount, it is 2.5 times your average 1 month's worth of payroll costs. That is going to be the amount of the loan. What really makes this appealing to everybody is that one, you can defer the payments. You literally don't have to pay 6 to 12 months. So if you borrow the money today, you do not have to pay it back until, like, for example, if you borrowed it April 2020, your first payment can be April 2021. Interest will accrue, but it gives you a long deferral process. But that's not even the small part. The biggest opportunity of this is loan forgiveness. And loan forgiveness component is something I'm going to cover later on in the slides. The beauty of the patient protection program is that you can be a business that is running, wanting to keep your staff. You can borrow this money and the government will give you loan forgiveness if you keep the staff. And I'm going to go through to explain that whole process. The patient protection program also is underwritten by the SBA, but actually you go through this process by borrowing from your existing bank. And I'm going to pause a little bit here because lately in the news, there's been many things that have been happening. One, this program was supposed to start on Friday. It didn't start on Friday too well. It started on Monday. Monday, within 3 hours, banks were shutting down because they're reaching their lending limits. So if you happen to be one of those unfortunate people that has a bank account with Wells Fargo, as of Monday, has stated that they do not lend anymore on this program. Bank of America turns out that they're willing to allow you to borrow, but they need you to have not just a checking account with them, but you need to have a credit relationship with them, i.e. a credit card or a loan. And if you lack one of these two items, you will also be rejected from Bank of America. The whole idea behind this is the banks are doing the underwriting and they want to do it as fast as possible. And therefore, if you're an existing business client with these two national banks and you have a credit relationship, you should be okay. Unfortunately, Wells Fargo has exceeded their lending limit and they're literally turning people away, and that's a tough thing to be in. If you're lucky enough to be with another bank, hopefully you don't have to worry about that. So let's dive into the Paycheck Protection Program. The first eligibility, you have to have no more than 500 employees, which is straightforward. If you are an individual that is self-employed, you can actually be eligible for the Paycheck Protection Program. The opening date for self-employed individuals, because they have their own separate guidelines that they're trying to create, will actually be April the 10th. So in 3 days, you will be able to submit if you are a taxi driver who's self-employed. You are a restaurant owner who's self-employed but maybe doesn't have any staff. Well, let me say it the right way. If you own a business and you have staff, you're going to apply for the PPP based on your payroll. If you're self-employed, i.e. you are a gig worker, you're going to be able to apply on April the 10th for yourself, okay? And that's something very important to note. Third, when you go through and you look at this application, the eligibility means that you're able to submit the application. And let me walk you guys through that. I think I'm one slide ahead. So not-for-profits. 501c3s are allowed to go through and submit their application. If you happen to be a masjid, you are technically allowed to submit only right now for associated costs. So if you have a Sunday school, or you have a daycare, or a thrift shop, or a bookstore. The other communities we've been talking to that are either churches or synagogues, they're actually taking the position that they're going to still request an application with their bank to get funding, even though the rules are really not clear on whether they qualify or not as a religious organization. So that's something that's still really up in the air, and we're seeking clarity on it, and hopefully it'll come out very soon. When you go through and you do the PPP program, you have the ability to go through and get a base assessment of how long you've had staff. And let me explain that in the next slide. Sorry, I'm getting a little bit behind myself. Okay, so what is the calculation for the monthly payroll cost? The monthly payroll cost is based on how many people you have working for you as of February 15th, 2020, and at the same time, the amount of payroll you paid in January through December 2019. And when you do those calculations, you can determine the amount that you're going to owe. Not owe, you're going to get. So let's cover what is included in payroll. So in payroll right now, you will include the salaries and wages, the payment for tips, allowances, i.e. your gross wages. If you have a payroll company, the payroll companies recently have started coming out with their own calculation of what is the allowable payroll cost, and you can use that. But let's assume you're running your own payroll. You're going to calculate your payroll for the last year. You're going to determine how many people are working for you, but you're going to take that number, add to it any health insurance that you paid for as the employer. You're going to add to it what you've had on the state unemployment tax, and then calculate the average. And you'll be able to come up with that. We're going to have a slide that'll cover that from that standpoint. What is not included in your payroll, average payroll calculations, is the payroll taxes that you pay for FICA and Medicare. If you own a medical practice and somebody has a salary that's above $100,000, you will have to limit that to $100,000. And we've had questions before. They said, "Oh, I make more than $100,000. Is that going to be something that's excluded?" We say, no, you're going to be able to get up to the $100,000, and that becomes your limit when you're calculating your average payroll. Okay?
Can I ask a quick question about the nonprofits?
Yes, Shahid.
Is the CARE Act and the loan program, what if someone does not have staff but has overhead expenses? Can they still apply?
So they can apply, Shahid, for the EIDL program, which is a pure loan relationship, and they can borrow up to $2 million if they qualify. If they are going through and looking at the Paycheck Protection Program, they will most likely not get any money because it's all based on payroll, like I've been stating. Okay, thank you. So I created a little bit of a model that shows people how to calculate the amount that they can borrow using the Paycheck Protection Program. So if you notice on the screen, we have stated the annual gross salaries of all of the staff, which you can get directly from the W-2s that you gave to your staff. And then on the right side, anybody that's making above $100,000, their number will be capped at $100,000. You take those numbers and you take the calculation, you determine that the amount of people that are making money up to the $100,000 is actually $575,000 versus the 702. Then what you do is you are going to see if you happen to have anybody working overseas, which is probably pretty rare, but here we said one person works overseas. Anybody that is working for you in Canada, for example, they cannot be part of the equation. It's designed to help only US citizens that work stateside. Once you have that calculation, you are not done, because you're going to deduct from this, you're going to add to this the employer share of the health insurance, which here in this example is $86,000. You are going to add the owner's share of the health insurance, because sometimes they're not included, so you add that back. Any retirement plan funding, like a 401k plan, a simple IRA, the profit sharing plan, if it's coming out of the employer's pocket, that gets added in. And finally, state and local tax, which is typically unemployment tax, like Minnesota unemployment tax, would be added in. Once you calculate this entire cost, which is for 2019, the entire year, then you're going to take that number divided by 12, which here in this example gives you $54,000, and then you're going to multiply it by 2.5, which gets you to $135,000, and that would be the amount of money that you qualify for under the Paycheck Protection Program. This particular model is important for you guys to use because the banks are actually going to ask you to include it in your form. And this way you can back it up and be able to have it go through the underwriting process and get it approved. I'm going to take a note on this. I need you guys to understand that a lot of people are leading you to believe that you just fill out a piece of paper and you're going to get all this money. That is not the process with the banks. We also added a lovely list of all of the documents you have to organize and give to the bank after you successfully complete your 3-page application form. And what we've been seeing is a lot of the clients that have been trying to do DIY, do it themselves, are getting rejected on their loan applications because when the bank comes back and says, give me your Form 941, give me your W-2s, give me your SUTA payments, give me how you came up with the calculation, it ends up that they did it wrong. So this list here is what you literally have to keep together so that when the bank does the underwriting, you can pass the underwriting and then you can be able to get in line to get the money allocated to you. So please keep that in mind because it is a very long list of things that you need to go through. Okay? So the most important part of this is the loan forgiveness, and everybody wants to ask questions about this. So hopefully I'll do this justice. The government is going to forgive 100% of the loan if you retain the same amount of staff as when you received the loan. Right now, the window is February 15th through June 30th. So the government literally is going to take a snapshot, and you're going to help them take that snapshot of how many employees you have on February the 15th, and is known as FTE, full-time equivalent. So you have 10 full-time people and 2 part-time, you have 11 FTE, for example. And then how much is the payroll for that window? So let's assume for those 15 people, you're paying them $35,000. That's the snapshot. You have 15 people. What did I say? $35,000. In June 30th, you will have the government take another picture. And if you've kept the same amount by June 30th of number of staff and average payroll, as long as it does not go below 25%, then you should qualify for full loan forgiveness. Okay? And what the SBA said is that their grant is they're going to allow for 8 weeks worth of time to be forgiven on this. So if you have 8 weeks worth of payroll, that's going to be the maximum amount of forgiveness you can get. Okay? If you happen to have a cancellation of debt because you've gotten other debt forgiven, that can reduce your, loan forgiveness amount. And there's other things that I'm going to cover that will reduce your forgiveness. Okay? The biggest one, which is the last slide at the bottom here, is the one I just mentioned before, which is if your payroll goes below 25%. You would then have a portion of your debt not forgiven. So any amount of loan forgiveness is calculated based on 2 formulas. And let me mention them again. Number 1, the number of FTEs that you have, February the 15th, June 30th. Is it your base is February 15th? If by June 30th you have the same amount or higher of FTEs, you should be forgiven on your debt. If it's lower, your debt forgiveness will be proportionately lowered. If you have a salary of, again, $35,000 in my example on February the 15th, and you come up with a $35,000 average salary on June 30th, you're fine. You start slipping below that, a proportion of your debt will not be forgiven. Okay? So let's compare these 2 loans head to head. You have the EIDL loan and you have the PPP. The EIDL loan gives you up to $2 million. The PPP gives you 2.5 times up to $10 million. The interest rate can be as high as 4% on the PPP, and on the EIDL loan, if you're a not-for-profit, it can be as high as 2.75 or 3.75. The terms of the loans are totally different between one that gives you up to 10 years, it can be 2 years or 10 years, or the EIDL loan, which can be up to 30. When you go through and you look at these loans and compare them head to head, the part you need to keep in mind is that the PPP does not allow you to get grant money and tax credits. And you haven't heard those yet. I'm going to mention them, but please keep in mind, the EIDL allows you to take advantage of the tax credits, while the PPP does not allow you to qualify for them. And if you do take the grants and then apply for the PPP, your loan balance will be knocked off based on that. Okay?
Sorry, Joey, I have a question. In that case, is it worth it to apply for both, since just the EIDL is going to knock out the PPP anyway?
Yeah, so the EIDL will not knock out the PPP. So let me be very clear. You can actually apply for both, Shahid. So when you go through, you can say, I need this loan because I need money, and I need this loan because there's a forgiveness component. And if I do my job and retain my staff, I can get that loan forgiven. If you're a business that, let's give an example in real life. We have a client of ours that's a restaurant. The guy literally had to shut everything down. He's not bringing any staff on board. So he's not going to go down the PPP route. He's going to go down the EIDL route. But he's going to qualify for all kinds of tax credits. And the first one is the one right here on the screen, which is literally in 3 days you get this money. The economic injury grant is a $10,000 grant that the government will give you. You do not have to pay it back. As long as you're a business owner, you can go to the SBA website that we showed you, fill out the application for the EIDL loan, the EIDL loan, and check the box. And you literally will get $10,000 deposited into your bank account, because in the application, it asks you for the wire information to your bank. And the government is saying they'll put this immediately into your bank account in 3 days. So in order to be qualified, really, it's very straightforward. Are you a business who's existed? Have you been filing your tax returns? You're basically eligible for this $10,000 grant. Okay? Another one that exists out there is the Employee Retention Payroll Tax Credit. And the Employee Retention Payroll Tax Credit is for you to retain the staff again, and in return, the government is going to give you a tax credit for qualified wages, 50% of qualified wages up to $10,000 per employee, or in essence, a $5,000 credit per employee. So if you can actually go through the EIDL loan, apply for money borrowed from the government, and at the same time say, you know what, I want to keep my staff. I'd rather get a tax credit than go through the PPP. Maybe you don't know how many people are going to stay on board. You may not be able to bring everybody on board. The government here says, fine, you're keeping, again, you have 10 staff and you keep 6 staff on board. Well, you can get the tax credit for those 6 staff. And the government is willing to give this to you. So go through and make sure you do it. The way you qualify for this credit is going to be run through your payroll services or your payroll provider. So again, we recommend you hire a company like Paychecks or ADP or any of the payroll companies. They know how to calculate this for you and be able to get you this tax credit. Now, employers who receive this credit, okay, under the Paycheck Protection Program, cannot go through and double dip on by getting loan forgiveness and this. If you get this and then you apply for the PPP, it is going to be reducing your loan. Okay, so just keep that in mind. You can't, under the PPP, you don't get this. Another rule that came out actually the first time with the Families First Act, and then was amended by the CARE Act, was the family sick leave benefits. If you happen to be an employer that's above 50 employees and below 500, okay, which should be a decent sized business, you have to comply with the Family Medical Leave Act and allow staff to go on medical leave, okay, for up to 12 weeks, and you have to pay them, okay? Now, in return, the government is gonna give you credits, so don't feel bad. And another thing that they have is the emergency sick paid leave, which is the same thing, except it's available for both full-time and part-time employees, and they will be able to get paid up to $5,100 for benefits, okay? The employers, don't worry, you're going to be fully reimbursed by Uncle Sam for providing this stuff, okay? but we need you to understand that that's something that is available. And this one lasts from now, which is April 1st, this week, all the way to December 31st, 2020. So if somebody gets sick and you're an employer that has more than 50 staff, make sure you talk with your human resources, because you really need to pay the staff this money, and then you'll be reimbursed. Okay? Another interesting tax credit that's out there is an additional incentive for everybody to keep their staff on board is the payroll tax deferral. Now this one, you have to be careful because it's not a grant, it's not a forgiveness, it's a deferral of the FICA and Medicare that you have as an employer to pay the government. The government says, look, anybody making wages up to $137,000, their FICA and Medicare for the rest of this year, you don't have to pay the 50% for 2020, and you can defer it for 2 years and pay it later on. So that means that you as an employer, you don't have to come up that much more money to match the payroll tax. But again, it's a deferral and you have to pay it over the next 24 months. If you're self-employed, you can actually get the same benefit, where instead of you having to make your quarterly payments, you can defer 50% of your FICA and Medicare, which again, it's designed for self-employed people. So their estimated payments on their form 1040-ES can be cut by reducing it by 50%, okay? If you are a person who has a 7A existing business loan forgiven, you cannot get this benefit, all right? Another interesting component in the law is the net operating loss carrybacks. When the law changed especially for corporations, the corporations were told, we're gonna take your 39% tax bracket and reduce it to 21%. In return, you cannot carry your losses back. This new act allows companies to go back 5 years and take their net operating loss for 2020 and bring it all the way back and be able to get a tax credit at that rate. So if you happen to be the unfortunate business owner that is losing money, keep in mind that this can be a way for you to get some serious tax refunds from Uncle Sam at higher tax brackets. And the same thing comes for individuals who are self-employed. They're now allowed to go back 3 years and carry back their losses, okay? If you have a big business, this is a big benefit for you. Other tax provisions that are out there that most of you probably already know is that, that your 1040s are not due until July 15th, 2020. Please keep in mind that not all states have followed suit. Where we work in the state of Virginia, the deadline is now June 1st, which is not July 15th. So we're having to deal with explaining to clients to get them to file on time. The interesting part that we like is the charitable contribution limitation has increased from 10% to 25%. And qualified improvement property now has a lower depreciable life. If you own real estate, I can explain that to you. And the 30% taxable income limit on business interest. Again, if somebody's seeking financing, large amounts, it used to be limited. They took the cap off on that. The
Joey, quick question about that last slide. Sorry.
yes.
So is this a federal thing, the 15 years depreciable life versus 39 years?
Yes, sir.
That's great.
Yeah, so it's very good. Okay. If God forbid somebody has got some really bad situation and they have to file for bankruptcy, the Chapter 11, which is for reorganization, has been streamlined to help people file, and they increased it from 2.7 million to 7.5. Federal payments received from businesses are excluded from calculations in Chapter 11. So if you borrowed money, you don't have to worry about it being included. Excise tax, you don't have to worry about that unless you're in the transportation industry. And medical providers now can even request Medicare prepayments so they can get cash in their pocket ahead of time. And then the government will take it off through a 2-year installment period.